Welcome to another live ASX strategy session. Great to have you with me. Thank you for joining me. Always good to have you here for these sessions. Lots of interesting stuff to talk about this week. We've got things going on in the ASX 200 and the small ords. Of course, we've got all those commodities to go through with gold moving around, some interesting developments in copper, and of course, I've got a couple of stocks I want to show you later on, which are breaking out. So not stocks which have already run, but which are breaking out. So I think you're going to find those interesting as well. Now, as always, everything we talk about today is general commentary only. Doesn't take your personal situation into account. You've got to go off and get personal advice if you need anything tailored, especially to you. So, Jed, let's get over to that first chart. So we'll start off with the ASX 200, and this has been this has been another strong week for the local market. Tuesday's rally took the market up to its highest level in 20 months. Hasn't been this high. You've got to go all the way back over here to April 2022 to get a level of where we've just been in the last week. So some really strong price action going on in those last few weeks. You might remember during November, I spoke a couple of times about the possibility of this being the end of a zigzag correction. This classic zigzag structure that you often see in markets, and so far, and more, that seems to be the case. And maybe this was that zigzag correction conclusion, which is now starting to rally. And I think it's always good to learn from the price action that we've just seen. And I think the really good lesson to remember going forward from this section in the last few months, it's always useful to be aware of where you get a false breakout, whether it be to the upside or to the downside. In this case, it's to the downside. So we had a clear support level coming across at around 6,800, break to the downside. We didn't get the follow through selling, and then we got the snapback rally. So a false break is one of those things I really like to look for, and it's a good one to remember because it can give clues to what's coming next. When you don't get that follow through selling, be open to the possibility that a reversal could be coming. And that's why I outlined that potential, that possibility of that zigzag decline, because we did get that false break. So a good one to keep in mind. So the question is, what happens now? So the ASX 200, we're up here now. We're testing some important resistance areas up around 7,500, which is this blue shaded area, to 1,650, which is up here at the previous highs. So we've really got triple top resistance up at those previous highs. So we've got that cluster, and I showed you last week. We've got this cluster of resistance coming in with where the market is now. And another thing to note would be that this market, the ASX 200, really is getting stretched above these moving averages. So I got the 50 and the 100-day moving averages on the chart, and we've seen the ASX 200 pull into this resistance band and get stretched above those moving averages. So this is what I'd call FOMO territory. So of course we know FOMO, fear of missing out. Now FOMO typically comes in where people who resist the early stages of a move, they then get panicked that they're missing out, and they decide they just need to buy. And this is the classic area where you get FOMO coming in, where the market gets stretched above averages and it sometimes gets up into resistance areas. So for me, this is not an asymmetric entry point at current levels. I think there's a high chance that we get some sort of a pullback. Doesn't necessarily have to be a big pullback, but some sort of pause in the trend, some sort of pullback. Let these moving averages start to catch up, and I think that from that perspective, I don't want to be chasing stocks that have run hard during this rally over the last few weeks. I'd rather be looking for stocks that are rallying off their moving averages, maybe stocks that are breaking out of ranges. Having said that, of course, I am still holding stocks. I'm holding my stocks that have run. Some of them have run pretty hard. I'm not selling those. I'm holding those stocks because I don't want to limit my upside potential by taking a quick profit because I've got this quick gain which is coming to some of these stocks which I own. I don't do that. I want to hold them, but I want to be cautious in terms of what stocks I bring into the portfolio now. I don't want to be chasing the ones which have had a big run. I think the key to making money in the market is to let your winning positions run and then give them room to move, and then also be a little bit careful when things get elevated. Think about, do I really want to be bringing in the stock which is already up considerably? I want to continue playing this from the long side. I like this. I like this overall structure. So when we compress this and look at this overall structure, I think it's positive. We've had the big run off the COVID low, and big rallies often lead to big consolidations, and that's very much what we've had over the last 2 years. We've had that big consolidation, but unlike what a lot of people have thought, the bottom has never fallen out of this market, and we've never got into a big bearish decline. That was always going to be a possibility. So it was a case of watching that price action, seeing how it developed. But we've never had those signs that are big sell-offs coming. It's been this frustrating and ongoing consolidation. So I like the structure. I like the structure when you get the rally and you get the consolidation, because that often then sets the market up for another run higher. I'll show you an example from a smaller time frame where we've seen something similar. Comes over to, we're going to use this COVID low again, but so we had this big rally off the COVID low, and then the market went into a sideways consolidation, quite similar to the sort of structure we've had in that bigger picture view we were just looking at, but on a smaller time scale. And we had let me just draw that in. There's the sideways consolidation. After it had gone sideways for a while, we then got the breakout, and the market then went on and rallied further. Could something like this be happening again? Well, I think that's entirely possible, because this is a classic type of structure that you see where a market rallies, it goes sideways, and then it rallies again. Other interesting thing to note here is that market, when it rallied back up, when it was getting close to a breakout, it didn't initially break. There was another pullback, a consolidation, before it rallied again. So it's not that these things play out in exactly the same way, but they do have similarities in how they look. So when I look at this one now, is the ASX 200 about to just steam through this and just keep charging? I think probably not. As I was saying, we do have this cluster of resistance. It's normal for markets to pause, to consolidate. This would be a natural place for that to occur. Maybe you do get a pullback towards the averages, but I'm encouraged by the structure, and I think it does lead to a setup which can lead to a break to the top side of this range as we move into new year. So the exact timing, who knows? But I think it's overall positive. So the play here, I think, focus on the long side, but try not to get overexcited after this recent strong move. Pick your time. Look for those asymmetric setups. Got a couple of interesting stocks I want to show you a little bit later on, and just give you an idea of the sort of things which I'm thinking about. Now, if you're getting some value from this, please hit that like button. Leave a comment. Let me know what you're thinking of these sessions. Are they helping you? And now what we're going to do now, we're going to move on to the small ords, the commodities. I've got those two stocks I want to show you, which I think are of interest right at this point in time. But of course, that wraps up the free section. If you're not a strategy session member, I've got a link below. You can click that. You can come and get the rest of this video. I'd love to have you on board. Doesn't cost very much. It's just really like the cost of a coffee. It's like bringing me a cup of coffee for prepping the rest of the session for you. So think about doing that if you're not a member. And now